Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. We can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Hold on a second. It was just like as I was running through the thing, I was like reading through the Discord log and I was like, oh, wait a second. I need to do something here. So I'm like, okay, yeah, time to turn on the music. Okay, guys, it is Wednesday. Let's come over here. Well, first, really quickly, we do have housing starts. 1.289 versus a 1.345 expected. So, starts maybe a little bit less than expected, but permits a little bit higher than expected. Housing starts change month over month, negative 1.8. Building permits change 6.1. Not seeing too much of a market reaction to that. We don't really have a ton of other news until the Federal Reserve interest rate statement. Should we stream that today? I don't think I can. I think I got something going on today. For the charts. So here we got the 10-year Treasury. Well, we had a pretty good bull run yesterday after the, what was the news yesterday? It was retail sales. Retail sales pushed us back up, but now in the overnight, the selling continues. Are we going to develop a range here, perhaps? Well, we'll see. Here's the S&P 500 still zigzagging across this pretty wide range. Like I would say, this is a relatively volatile for sticking to a range in the S&P 500. Oil, after seeing a down day yesterday, is coming back, recovering that. Coming back to the top of its range, so maybe they'll make another shot at 71. Gold and silver, well, they tried, but didn't go well. They have kind of settled lower. Kappa, similar to the other metals. And the Japanese yen, it's kind of like the treasuries. There was a little bit of a reprieve, and now they are kind of heading downwards again. But the dollar itself has actually kind of been very much sideways. So, and then Bitcoin is still pushing hard, looks. So they are up there. There was a pretty decent decline, but I don't know. Like when you look at these end up actually being pretty big moves, but you can't really tell because it's been up so much. So that's where we're at with Bitcoin. I think that today's Federal Reserve meeting could be relatively significant because, we are getting a little bit more insight into the data and everything, and we'll see if the Federal Reserve sees fit to shift or not. So, we would like, I would like them to be dovish and continue to cut rates because I think that the labor market is super, super tight. And there may be a case to be made in some situations where you have a dual mandate and you need to take care of the unemployment more urgently than you do the inflation. But with both of them being relatively mild right now, I don't know if we're in that situation yet. But we probably will get a rate cut today. So we can discuss the aftermath of that tomorrow, though, I think. And by the way, good morning, Ray, A. Paul, Robert. Uzi's not here, but he told me he is giving his dog shots. So we'll say hi to him, too. Anyways. All right. Wow. So I did this recording the other day on using a service, and I think screwed up, and trying to figure out how to get a hold of like their support. Let's figure it out. I'm gonna figure it out. There's gotta be a way. I have to have like a subreddit or something. Oh, see, there's Zuzi. I told you he'd be here. Been logging literally everything the dog does every hour for the last 2 days. That's too much. I wouldn't be able to handle that. Well, I think I'm giving up on this service. I recorded something on it, and I recorded it like on my machine. But you're also supposed to be able to come in here and like, you know, with this one, like here's one where I tested myself, and you get like you can download both sides and all of this sort of stuff. And I think that the other one, like it never stopped recording because the browser like crashed or something. So I'm sitting here like, maybe I just got to tell them on their side, like, stop recording it or something. Like, maybe there's something they can do on their end for it to show up. Okay, let's go to the help. Oh, you see, like, there's no help page. Like, what the heck? What the heck? And there's no way for me to get in touch with you. There's not even any, like, social media stuff. So, yeah, I don't think I use them again. He's responding well to insulin. He's not old and feeble. He's 10, but he's perfectly active until one day. Huh. That's it. I tell you what, it looked like maybe we were getting the beginning of a trend. I mean, they did enough that if I was really expecting a bull trend in the treasuries this morning, you know, they were pushing the edge of it and everything, but they got yanked back down there awfully quick. Okay, Tilt says or asks, have you ever tested any models using Heiken Ashi candles? So you don't want to use Heiken Ashi candles because they cheat. That is a way to cheat the NinjaTrader backtester. But you could potentially create an indicator. Let's see here. I forget what the specifics of them are. They're like average and stuff like that, right? Normal candlestick charts are composed of open, high, low, close. Heiken Ashi technique shares some characteristics by using some modified formula. The close is 1/4 the open, high, low, close, or rather, the average price of the current bar. The open is the midpoint of the previous bar, and the high equals the max of the high, open, close. Okay, so the high is still the high and the low is still the low. See, I'm not so sure why that would generate any edge for you. But you can get the average and the midpoint of a previous bar really easily in NinjaTrader, I think. Let's see here. Like, isn't there a way to just, like, add an SMA? And then here on the input series, instead of saying the close, you can say, right, median, or the typical. Uzi says it's for longer term trend spotting. Its inherent lag makes it a short term intraday. I don't know if it seems lagged to me per se, but here's my guess: is you've tried back testing on Heiken Nishi candles, and it worked kind of well. So, okay, it's average. It has to be like, but it's only the average of the current bar. So I don't know if that would really make much of a difference to your average strategy, right? Like what I would expect to happen is if you were to run a strategy using Heiken Nishi bars versus regular bars, because most of the time I'm only looking at the close. Like, is the close above? Okay, stop arguing with me. Okay, if the close is above the moving average or something like that, right? And so then you can adjust it to say if the average of that bar is above the moving average, right? That would be the difference. And I suppose that would maybe lag it a little bit, but I think that there would probably be other situations where maybe a regular bar wouldn't trigger and the Heiken Nishi one would. Okay. So like the difference between them should be negligible. But then what's going to happen is because you're using Heiken Nishi bars, the backtester thinks that you can enter in at the average instead of the close. And if the average is less than the close, like if you're buying and the average is less than the close, which during a trend it probably will be, the backtester will basically let you get in on a position lower than what the price actually was. And so when you do a backtest on a Heiken Nishi bar, it will appear that it performs better. Right? In 1 day timeframes and above, you have a whole lot more room for error in entries. Heiken Nishi works in that environment. On intraday timeframes, you're going to wind up taking a bunch of trades you don't need to. Anyway, because somebody was asking me about this, and I was like, well, you could maybe make an indicator that shows this to you, right? So, do you guys want to do that? I think it would be like only like 5 minutes. Indicators, new indicator. I'm not even going to make it a speculator as well. I'm just going to call it HA lines. I'm going to come over here and copy. Oh, you know what? I think I have something that's like fire day point of control or prior day. What's this one? Yeah, this one will work. Oh, wrong spot. Right here. Their average is misunderstood. That lag actually helps with premature access. Okay. Oh, we need to restart the playlist. No, I was wondering. Well, I'm thinking about it. 100D or we go to stream beats. Do they have new ones? Hmm. Oh, here we go. They have released recent stuff. But not like new. Well, let's just listen to their most recent albums. Okay, that's a little soft, but whatever. Okay. Values of 0 equals so there's the average. Values of 1, 0 equals midpoint of the previous bar. Of the Hypothetical bar. Well, that's interesting. So like that, I think for the first bar, you would have to use just the open, the regular open. But then ever after that, then you're using the Hypothetical open and close of the previous bar, right? And it's a midpoint of those. Well, I always forget the double equals. You like the slow music? I decided to try a different playlist today. Maybe we'll regret it. We'll see. So I'm checking these bars, and some of them it seems okay. This one seems wrong. I think there's something wrong with my formula, because why is that one? This one also seems wrong. But maybe that's like this one gets screwed up, this one gets screwed up, something like that. But let's change it. Let's fix the two things I can see on here that I know needs to change. That's one. That this needs to be an overlay, and two, that this shouldn't be blue, it should be like white or something like that. We'll make them white and yellow. See, this one right here. This one should be a doji. These two lines should be on top of each other. Perhaps, though, is that like the difference between... It is not. 25, 50. Oh, but it could be. So maybe it's that this one got rounded up and this one got rounded down when these Heikinishi bars do it differently or something. Ooh, actually, you know what we can do? As we can just come in here to like bar types. Heikinishi bars types. Yeah, there we go. Okay. Round to tick size. Ah. Okay, that's probably better. Oh, now that's interesting. So the first bar just doesn't have an open, I guess. This one, instead of getting the open close or the value of the previous one, it uses this get open get close, which might be better, but let's I think that this will fix our problem. I'll add additional parentheses. Just oh, actually, you have to have it, don't you? Have to have additional parentheses. 'Cause it's a method. Gonna fall asleep while driving. Yeah, I'm just not feeling this. I'm just not feeling it. What's this one? It's interesting. He has an EDM one and he has a house one. I wish that they had more like not genre specific playlists like the hype playlists. Whatever. Hold on a second. I forget what the correct thing to reference here is. I think you use bars array 1. I think you use this. Oh, the treasuries came back up there, did they? Oh, it turned into a good trend. Gave up on it too easily. Although the cumulative delta is a little bit off, so I'm still a little bit unsure about it. But there would have been a good trade. Aha. So that fixed a few. I don't think it fixed this one because it's still saying... Oh, that one's correct. That one's correct. But this one, okay, now I think that the open of it is fine. Or sorry, is that the close of it? But the open should be here. So it rounded up still. See, I just feel like it's giving you a deceptive view of what it actually is. Like, I feel like that Heikinishi bars are a lot like Renko bars, where it just fools you into showing you something that you'll see after. No, but I have that. It's always the midpoint of the prior candle. But it's the midpoint of the prior candle from the perspective of the Heikinishi bar. Which is where I'm kind of like, okay. I think it's close enough, like it's only off by a tick. I think you can run with it. But then the question is, what would be the strategy that you would want to run off of it? What's the trigger? What's the setup that you would want to test? I would use it as an exit. Okay, keep going. What would the exit be? Okay, he says on a color change. You can't join the paid Discord on a mobile device. It has to be done on web. I did not know that, but that would be a Discord thing. I'm shocked. I'm shocked though that's the case. New strategy. Hiking. Ashi. Oh, it's just one eye. Hiking Ashi. Excellent. Okay, over here we had a strategy called random trade. I don't like the individual sounds on this song, but like the construction of it is pretty nasty. Nasty. Oh. Yeah. Okay. So it's going to enter a random trade, and then we're going to have HA, what do we call it? HA lines underscore HA. Underscore HA equals HA lines. EF. You know what? I should change this. This is the close. This is the open. So it should be. This should be 1, and this should be 0. Easier to remember. EF underscore HA values of 0, 0 greater than underscore HA values 1, 0. In other words, oh, we want it the other way. If the close is higher than the open, then exit short. And same thing around with this one. If close is below the open, then we exit longs, right? Then we need to have a way to selectively do this. And just script property public pool use HA get set. Use HA true. Did I screw up over here? Screwed up somewhere. Unless that was an old... Okay. Hadn't updated yet. Yeah, so the thing would be like, we have to have a comparison, right? We have to be able to say, this is better than this. So we have to say, so I can say the exit is if I just exit when it's, you know, a down bar or an up bar or whatever the deal is, right? Is that better than just random? Essentially. Is what this is doing. Because right here's saying if we use the HA, then we're going to exit on things. Whereas this other one, it's going to it's setting. Well, normally it's setting stops and targets. Essentially. Yeah. Anyways, we're just going to start with that. Then maybe you will tell me what would be a more fair comparison, right? Because I think that a better one would be you're using regular bars to exit and you're using Heiken-Ishii bars. Well, if we used regular bars to exit instead, well, if we have a bar, if we go long and we end up with a down bar, then you just get out. They're probably going to perform pretty terrible, right? My guess. Didn't change the name of it. Ross Phillip Gerard. What are we doing here? Just logged on team. Hey, he knows that we're a team. Well, so somebody asked us to backtest Heiken-Ishii. So I have created a test to correctly backtest Heiken-Ishii. If you try and backtest on Heiken-Ishii bars, then you cheat the backtester. So what we did is we created an indicator that shows us what the open and close of a Heiken-Ishii bar would be. And we are now trying an exit, so it's going to take a random trade. And if the Heiken-Ishii bar is a down bar, then it's going to exit that trade. Okay. So we're going to do optimization, hike and she exit, use HA optimize, seed optimize from min max to, let's do 200, increment by 1. Oh, I have a start time on this. Really? I think that's wrong. But we'll see. I think that is there just to limit it to only trading during like the most active times of the day. Essentially. Okay, let's just do it over this year for starters. Oh, we don't really need to include commissions on this one. That'll just kind of make it a little bit more difficult to analyze. Okay. Hey, sharp ratio 0.87, 0.94. That's pretty good, but that's random. Okay, optimization graph. So now we can come in here and we can say on one side the seed, and on the other side, oh, why is it not letting me look at use HA? Oh, we ran into this last time. Freaking, this is so dumb. You have to make this an integer. It won't let you do the optimization graph with booleans. Public int use HA. If use HA equals 1, let's try this again. So now when I come over here, use HA as a 0 and a 1. Oh, that's wrong. There we go. Min 0, max 1. Okay, let's try this again. Seed min to max 1,000, or not 1,000, 200. 200. 1 to 200. Okay. Try that again. Seed, use HA. There we go. So it seems to me that using the hike and Ishii exit as opposed to not having any exit just limits the amount of volatility that you're exposed to. Wish I knew more about this part of stuff. I think you know more than most people. Right? Yeah. But this one's pretty simple, right? It's actually way more simple than it appears. Because there's a couple of little weird bits in there that you know, most people probably wouldn't have seen. So what is going on here? On the first bar of the session, we come in first. Oh, I don't think you need that double Boolean. That that doubled anymore, but I digress. We figure out what the current trading day is, and then there's like a start time, and we basically add a random number of minutes to that start time. So this int offset equals rand.next stop time means it will pick a random number between 0 and the stop time. So it picks a random time within the first 2 hours, essentially, of the S&P 500 open to take a trade, right? It also picks a direction, whether you go long or short. Okay. And then when we get to that time, and you know, if the direction was 1, then we go long, and if otherwise, then we go short. Okay. And then what we added was the Heiken Ishii bar. Okay, if the Heiken Ishii values, if it's showing an uptrend versus a downtrend or something like that, get out. Whatever, right? So the problem with this test is that one has an exit and one doesn't. So what this is really showing us more is when you have these additional exits. When you have these additional exits, sometimes it exits before your profit target stop, right? Ergo, of course, the volatility of it is less, right? So this particular test isn't showing us very much. So what we could do is we could say, let's copy this. If use HA is 2, then we could say if open of 0 is less or am I doing this right? Yeah. If open of 0 is less than close of 0, then we want to get out of our shorts. If open of 0 is greater than close of 0, then we want to get out of our longs. So now we can come back to our back tester and we can just say max 2. So that'll give us another 200 iterations of it. This is a random number thing right here. Go back to this. We're passing, we create a new random seed. So when you create the random number generator, you pass a seed into it. That way you can like duplicate it. So you'll get the same sequence of random numbers with the same. So if I put seed of 0, the sequence of random numbers that I get out of it will always be the same. Essentially, that makes it duplicatable. Okay. Well, it's kind of interesting. So what are we seeing here? Well, okay, so there's more variability when you don't have that early exit. But does the early exit based on regular bars versus Heiken Ishii bars really make a difference? Well, there is a little area here where it seems like the well, maybe not. I don't know. Looks like they both get screwed on that particular one. Doesn't look like it really makes much of a difference. Do you have an affiliate link for NinjaTrader 8 when we buy the platform? No. Unfortunately, because NinjaTrader is a introducing broker as well, they cannot do that sort of thing. Okay, so we kind of learned something about using Heikinishi exit, and we kind of didn't, right? Because what did we really learn? Adding an extra filter of some sort to exit a trade early will tend to reduce your profits and losses, your net, overall, simply because you're going to get out earlier than you otherwise would have. That matters more than the specifics of what that actual exit is. Now, maybe it would be different if there was like a real edge to the exit, but I don't know. But so far, it doesn't really lend a whole lot of credence to using Heikinishi bars. And it seems to me that the effect of Heikinishi bars is really similar to Renko bars in that it's primarily psychological. It removes a little bit of noise and makes it appear to you that the trend is more clear. But then when you go into an algorithmic view on it, it doesn't change anything. Question I had for you yesterday: if you have the paid version of NinjaTrader 8. I'm not quite sure what you're asking there, but I'm guessing that you're asking, do I have the paid version of NinjaTrader 8? So I have a developer license for NinjaTrader 8, but my developer license does not allow me to connect to regular Rhythmic. There was Rhythmic, and there was Rhythmic for NinjaTrader. And NinjaTrader brokerage doesn't support Rhythmic anymore. So, there's basically no way to get Rhythmic with NinjaTrader, with the latest version, without having a really, really far back, what is the word that they use? Like you have a multi-broker license from really, really far back, which I don't have. So what I could do is I could go and I could get the what is this other data that they have? Kinetic. So there's kinetic data, and one of the benefits that you can get as a NinjaTrader ecosystem partner is free kinetic data. You still have to pay the exchange fees, but that's like $30 a month. So basically for an extra $30 a month, I could get kinetic data. But it would basically be giving me the same data, but it would allow me to use the latest version of NinjaTrader, and it would allow me to use my full license, right? So that I could use all of their order flow indicators and all of those sorts of things, right? There's that approach. Or I could switch back to NinjaTrader brokerage and use the bridge. But I was always a little unhappy with when I was using them as my broker, so I don't know. I see that for psychological effect, but for discretionary trader, I could say that as well. But I'm not even sure that the psychological effect is giving you an edge. It's a psychological effect that makes you think that it works. You like the way that the chart looks, but I don't think that it actually leads to better decisions. Yeah, I can't show you what the intraday bars look like bar by bar for volume profile, but do you not? I thought that you were using the volumetric bars. Let's close this down, so I think we're done with that experiment. I think that it will maybe let me pull up the settings, but just not let me create the chart. But let's see what it does. So if you come in here and you change the bar type to volumetric. Yeah. Okay. So now you can do all of this stuff. Okay. So delta type, I think you want bid ask. But then there should be... Oh, you do have to add them to be able to see the other properties, unfortunately. If I click OK on that, then it should open up a chart that just says, you have to unlock it. Yeah. Data series. Because there's like way more. Oh, okay. So like there's bar statistics. There you go. That's the little things that are down at the bottom. I thought that there was also a way to say, you know, do you do a volume profile instead of the bid asks bit? Maybe not. No. Cancel. Now another thing that we can do though is so like I have minute bars. So what is the name of the volume profile that I had been using? Yeah, you don't want to do that. Cams. I think it's the one pops up from one of these. Oh, here it is, cams. Okay. Well, that does not even work. Oh, is it because I need to have tick replay turned on? No? I just want to see what it looks like before I buy NinjaTrader 8. Yeah, I understand. They have a volume profile one as well. There's order flow volume profile. Let's see here. On theirs, profile type volume, display mode standard, profile period bars. And then you can make it a 1 minute bar and then it would show you the volume profile, right? I don't know what it looks like though. Or I mean, it looks like what is it that you want it to look like? I mean, come on, a volume profile is a volume profile, isn't it? Right? What is it about it that you know think would be different? But I can't show you this one. This order flow volume profile, it'll tell you now. Right? It'll say upgrade to a lifetime license. But I can show you the settings. Now, why is the cams one? But you can open that in NinjaTrader yourself. You should see that indicator in NinjaTrader, and you can at least see the properties of it. Oh, what the heck? I don't know what that's about. Let's do something here. I come to this version of the cams. Template, save. Save as default. spelled exists. Replace it. Dang. I add it like that. Does that work? Come on. You killing me here. Oh, actually, it is showing up. It's just at the beginning of the session. Ah, okay. Ah, look. There we go. Bar. Region 2. Bar. Bar. So that one might be working, but I just need to zoom in enough, perhaps? Yep. Kinda works. Kinda works. Oh yeah, Uzi sent us a picture of it doing it by bar. It expands out the bars. There you go. I think I can get the camps to look like that. I just would have to increase the bar spacing, I think. Yeah. There you go. Something like that. Maybe you change it to a 5-minute period. It would be a little bit better. Here's the thing that, like, how I would recommend looking at these sorts of things is what we typically want to do, because humans are all about using their observations of the environment to predict the future. Like that's basically what our brain is optimized to do, right? But it's optimized to detect, to be able to predict where herds are going to go and the seasons are going to change and things like that, right? So what we want to do is we want to look at a thing and then, okay, that looks interesting, and then maybe we see the patterns in it, right? So if something is aesthetically pleasing to us, especially, then heck yeah, we want to put it on the chart and everything, right? But the question when it comes to trading is, what are you going to specifically do with it? What is the thing, like in this instance, when I have a volume profile, okay, well, what additional data have I added onto the chart that I can now do calculations with? Well, there's the point of control. I don't have to have the full volume profile to have that, but, that's one of the pieces of information. There's the volume profile itself that might tell me, like, what distribution type it was. Like, I might be able to say, if this was a double distribution bar, I would do one thing, versus if it's just a distribution around one, or if it's more like this one. Well, I think this one you could call a double distribution. I think this one you would call is just a disorganized distribution, right? And so perhaps you are categorizing the volume profile of each bar and you're making a decision based off of that, right? But if that's what we're going to do, what you really want is you want something that, you know, specifically hauls out that piece of data for you and then incorporate it into a strategy that you can backtest to see if that piece of data and the way that you want to use it actually results in more favorable results. Change it to 40 minutes and use ZN. Oh, well, I closed it. Maybe Uzi can change it for you. I can show you on. Oh, no, I didn't close it. Wow, why would you do 40 minutes? That's so weird. Yeah, it's so weird. And then we go to ZN. Okay, cool. Is that giving me the granularity that I want? Yes, it is. Despite it. There you go. I feel like this has trended way better than I thought it would today. Like, 25-ish was like one of the key spots where I might have been like, Well, this one is just using cams. That's not the NinjaTrader one. Yeah, it's cams v2. I don't know where you get. I think I downloaded that one from futures.io. I don't know if it's available somewhere else. I think I've given that one to you before, though, too. And just attach the file. Let's see here. Bin custom indicators cam volume profile v2. Because he says I don't use it anymore. Yeah. But the point is this, like, okay, so I can backtest just about anything. Some things are harder to backtest than others. How do I decide what I'm going to backtest next? How do I decide what to backtest next? Because if I backtested every idea that's ever been posted on the internet, I would never stop backtesting, right? And the majority of the things that I see online aren't profitable, right? So how do I filter? Got to be something about it that says to me, yeah, or even if I'm just adding it to my chart. Got to be like, what is the thing about it that's going to make me say, hey, oh, by the way, I forgot to turn this strategy on. I hope that would it have taken any trades in this? I'm wondering if there's a flaw in this. Like, we should look into this a little bit more. This hasn't taken any trades, and I think that it should have. I think it should take an average of 1 trade a day. Anyways, like, so what are some of the things that will make me like interested in it, right? Well, one is if somebody has empirical evidence for it, right? If it's in line with, if it seems like a statistical, you know, a quantitative way of identifying a property that I already know about, then that definitely makes me interested in it, right? If it's something that's radically new and different from what what people are typically thinking about and doing, that might make it interesting. If it's unusually complex, that might make it interesting to me. Or like somebody on the stream is specifically asking about it. But, you know, how many things have we backtested here on the stream? And it's kind of like, yeah, well, it's not really going to be a whole lot, right? It's just it's the way that it is. So I feel like that we're not selective enough with what we give our attention to. So this indicator is something that I want to dig deeper into, though. We're running this on ES. Well, it says that it took some on the 17th. It says that it took some yesterday. But not during our... No. And even during our session. So why didn't it do it yesterday? So hold on a second. I want to come into this. Let's disable it for a second. That save history part shouldn't change. Doesn't change anything on this. What if I give it 90 days? And isn't there a way to get this strategy to show you the historical entries and exits? Oh, I think I might have to set this in the data series first. By executions, text and marker is set to true. Oh, okay. Oh, there was some on that was that day. Yesterday. Okay. So and now I don't know if that changed anything. Oh, actually let's check that. Was it the data series bit? Like if I only give it 5 days. Yeah. Because I'm using an ATR on that one. I think. Yeah, daily ATR period. And I didn't add that little trick that I found the other day. Shall we add that little trick? Let's see if we can. Because I did do this. By the way, you want to see that one? I never showed you guys that one. Let's do it with ES. Oh, not volumetric bars. We want 1 minute bars. Okay. So we add 1 minute bars, indicators. Oh, come on. Oh, because it's tick replay is on and everything. Tick replay, 5 days. Okay. Give it a second, I guess. That's not right. That's taking way too long. One minute. Okay. Better. Indicators. VWAP bands. Then I do think for this, you have to have tick replay turned on. Just copy it into your indicators folder. Make me do it. Seems like there's something wrong. Like NinjaTrader's not loading ES tick replay data very quickly for some reason. What was with that? In fact, I think it crashed there. Maybe my little trick. Oh, no. Totally worked. Okay, there you go. Check that out. Not bad. Not bad. Creating VWAP bands on an ATR basis. I kind of wonder, like, do I even need, like, I did it by a quarter, but do I really need that? Like, maybe I should do it by an eighth so that the bands don't go out as far. Have 4 of them. But using a daily ATR, yeah, pretty good. Pretty good. Okay. So how did we do that? Giving you a secret here. You can add, or you create a bars period value, and then you use add data series. And this parameter right here is how many days, how many bars back you need to go. So I can add a daily data series that includes enough for my ATR, essentially. So that's what we need to do here on this strategy right here. In my, well, maybe it's a bad idea to do it on a, I don't know. I'm gonna wait. Now mess with that. But I will on this data series. It needs to be 30 days. Least. Strategies. Enabled. Okay. Okay. Now maybe it will take some trades. Probably should have traded this. If I was a little more serious in like live trading right now, I think I would have focused in on that and I would have taken maybe, well, wait a second. So when would we have gotten some sort of a backing? I don't know if necessarily that I was expecting to see a long here. I think I was hoping to see a long today, but you know, the downside in the overnight really discouraged me from it. But here, let's see here. So we started here at 6:30. So this was kind of that rise and drop that discouraged me. Oh yeah. No, we totally could have. Now, typically I don't expect to see it just go through the inventory cost basis like that, right? But in this case, if I'm hoping for a large meta order long, these don't matter. So I might have been able to get in probably the place that I would be the most likely to have gotten, because maybe some of these I might not be quick enough, but I could have gotten at least 25. And that's what, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. That's really good. 11 is really good. So I think, yes, I think that I did miss an opportunity there. Opportunity for a sim trade, at least. Not a huge deal. Oh, that's right. Tools, export. Maybe I should make my own volume profile. I don't know. I kind of don't like to do that for things that NinjaTrader's already made, right? Have to have like really good reason other than just that I want to have my own to make a volume profile. So I wonder if there's a way to make an algorithm that identifies the distribution type. It's a single distribution, a double distribution, or disorganized distribution. That might be interesting. I don't have a whole lot of optimism that it would provide any value, but I saw this thing. So apparently, Dalton is putting out a new book soon, like in the next month or something like that. And there was a post about it on the day trading subreddit, and like all of the comments were like, "Oh, it doesn't really work anymore. I don't really care." It's like, wow, they've really turned on that, huh? That's interesting. getting to this point where, you know, to expand our live stream, so many different things that we can do, and a lot of them are services. A lot of them are services that I don't know if they're worth it or not. I think if I start doing more interviews with people that, you know, if it costs me $20 a month, I think that we would make that back. But at the same time, I'm also kind of like, I think I can do it for free. Well, Treasury's settling a little bit. Kind of looks like a post-meta order pullback in the 10-year. In the 5-year, it looks like a little bit more significant of a sell. We are seeing a little bit of a bounce in the S&P 500 too, so... Probably not interested, to be honest with you, D. So the people that I'm interested in interviewing are going to be people that can discuss empirical evidence with us. So if somebody ran a momentum strategy and got lucky one year, that doesn't necessarily make me interested in talking to them. Reminds me of that whole thing. What was that guy? He was I think he was a Robbins Cup winner, wasn't he? And then he had him on oh my gosh, David, you just short-circuited because we were just talking about James, right? And everybody was like on Reddit, everybody on Reddit was like, I don't think it really works anymore. But no, empirical evidence, guys. So like, if they have a research study out there that appears to be relevant to us, or even if it's not directly relevant to us, tells us something important about the market, like proves something, then I want to talk to them, right? There you go. So, what was the name of that guy that he was a Robbins Cup winner, I think, or he was a champion trader of some sort, and they had him on CNBC, and they asked him a question about the company that he was, you know, had a position in and was promoting, and he was basically like, what's that? You're breaking up. I can't, you know. And like totally dodged the question by faking a technical issue. What was that guy? There's a number of guys that were really, I knew of one or two guys that really liked him, and then his reputation got tarnished significant. Like everybody was mocking him. I have one that I recorded yesterday. There's gonna be a little jank because like I recorded. We used some software and it's supposed to like save the recordings, but it didn't. So, but I also screen recorded it, but I forgot to start it at the very. So there's like a little bit at the beginning that's gonna be missed. So I think that I would just like record a little bit. That's like, okay, you know, like here's what's going. You didn't miss anything. Here we go. And then just put the whole thing. And you know, I might cut out some parts, but I won't do a whole lot of editing. And Yeah, I wouldn't say that there was like anything groundbreaking in the discussion or anything. I think that it kind of focused a lot more on industry kind of things and kind of maybe some of the hard truth that some people need to hear. But, yeah. Patrick Nil, I've never even heard of them. Two-time World Trading Champion. But honestly, that does not impress me. Like, there's no way for me to know if like they're just lucky, right? He sells a master class. That also like bumps it down a little bit, right? I'm not saying that there's anything wrong with selling a course, but the people that I'm interested in talking to probably aren't selling courses. So if it was somebody on those lines, I would maybe be interested in talking to them if they had a YouTube channel and it was like a YouTube collaboration. There's a thing is that, man, I've never really come across another YouTube channel on YouTube that I really feel comfortable associating with. Like, there's some that are okay, but there's never been one that like, oh, I really admire this. It just doesn't. It's so weird the way that this has come out, because I started doing this the earliest that you could do this sort of thing. So I am OG. I am the OG streaming day trader. That's what we call it. I am like the OG streaming day trader. And a lot of other people started it at a similar time from me and have had a lot more success, in part, like, and when I say success, like success on YouTube, in part because a lot of these guys are trading products and instruments that have more interest, right? Like the trading stocks, or even if you're trading S&P 500 futures, you know. And maybe some of it is just luck, but whatever. And so I've always been doing my own thing, and you know, like, I have a way of doing it, and I go and I look at practically every other YouTube channel out there that I've ever seen on this, and I hate what they do. Maybe it's just because of the way that the algorithm works. That if you come in and you tell people that you're making a ton of money by putting some big number on your thumbnail, that causes people to click on it. And I really don't feel that that is honest. I frankly kind of think that it should be an FTC violation, but probably they would never go after that. You can't compete with that, right? But any YouTuber that is running things the way that I think that they should be run probably isn't going to do as well in the algorithm, you know? So that's why it's turned out the way that it has on YouTube. Because I would like to collaborate more with people, but I don't want to collaborate with degenerate retards. And that's what some of these people are. Unless they were, you know, some people came to me. They're like, you know what? I would really like to understand the things that you know, and then I can teach you. And then that would be worth it to me to be able to reach a larger audience. But like, it has to be empirical. Like, this is the issue. I'm not interested in discussing, hey, this person, they have had some success in the past, and let's talk about how they trade. I don't care. I don't care. You've got to show me with data from the market that there's an advantage or disadvantage in a certain thing. And if you can't show that, I don't care. There you go. I'm hoping to understand things, you know, and follow in a useful way as a trader myself one day. Yeah, well, I think I have a lot of really great videos to help you do that. Just go watch the order flow video series. So with interviewing people, and I'm still working on it. But kind of my objective with interviewing people is to help you guys see how the professional side of the world works. Okay, the professional side of the world they're doing something they're playing a completely different game from retail day traders, right? But I think that understanding how those funds work can give you a lot of insight into markets that can help your trading. Okay, because you're trying to predict the movements of these large institutions. I'm also really interested in promoting the things that we have learned from econophysics researchers. I think that they have really elucidated some really important things about markets, and the world is kind of ignoring them. I saw there was a meme yesterday. Where did that meme go? Oh, I have it in here. I saved it. I liked this one because it was on the top of Wall Street Bets. Right. Oh, in financial markets, in the textbook, markets are perfectly efficient devices to convey all the information about stock prices, and market participants are rational actors seeking their best interest by maximizing their risk-return ratio. Everything is priced in. And then what are things actually like when you go on Wall Street Bets? What do you see? Let's gamble all my life savings in 0 day to expiration options. Fart funny, I buy. I read in Barron's that it is a solid company. Elon tweeted about it. Oh, right. Like, it's just absolute. These ideas that you see in academia are just absolutely ridiculous. And there is a group of researchers that I think have made a pretty compelling case as to why these 3 ideas here, that markets are perfectly efficient, that market participants are rational, and everything is priced in, are just outright wrong. And also an explanation for why the majority of economists end up being wrong about things. It's because they're not factoring in the true nature of markets. And the true nature of markets is a lot more like this down here, that people are irrational and make decisions based on pretty silly heuristics, but that's like the best that they know how to do, so that's what they do. So I want to promote those people. I want to be the person that brings the concepts from econophysics into the mainstream, because I think it has to be. This right here, like here's the thing. This actually makes me mad when I see people say this. It actually makes me mad. Why does it make me mad? Because they're effing lying, and they know it. Listen, maybe there's some people in academia that they've just been in it for too long and they're really obtuse and they're just never going to admit that they're wrong, and it's a point of personal pride, okay? But everybody that's a professional in the market knows that this is bullshit, okay? You cannot be actively involved in the market from a day-to-day basis and believe this. Is just so blatantly obvious from interacting with the markets that markets are not rational, that markets are not efficient, that all information is not priced in. This is a lie that they tell you so that you don't question the results. That's what this is. That's why this came out the way that it did. And when they said it, the industry latched onto it so much, because then they can say, hey, you really shouldn't be doing this yourself. You should go and you should just give it to the index fund. You should just give it to us and let us manage it, and we'll make all of the money, not from making good decisions, but just from managing a lot of money for you. And then the market does what it does, and when it does what it does, nobody sits down and says, well, this is the fault of all of those money managers and the people that are making these decisions for us that we've been giving to manage our money. No, we say, It's the market. The market knows we've created the market into this god that is all knowing and perfect in every instance and always knows what is best for the economy. It's bullshit. It's a lie that they told us to prevent us from questioning the results. And then if you can't question the results, then the people that are being successful right now can just continue to ride on that past success and accumulate more and more wealth. And the people that have better ideas are never able to gain any traction. That's what our society has become. So that's why I want to push this. Those are the people I want to talk to. They're releasing studies. They have real data, things that teach us about the real nature of markets. Not some guy that, you know, he had a good trade once. Don't care. Really don't care. I have a list. I have a pretty long list of people. Do you value any economic skills from university? I feel like that's too general of a question. I don't know if so most traditional economic models are just fundamentally flawed because they assume that the market is perfectly efficient and that all individual participants maximize their reward and all of these sorts of things, right? So the kinds of research that I'm more interested in are like agent-based models where they go in and they say, okay, let's create an economy and we have different types of participants. And we think that a certain portion of participants that they behave this way and a certain portion of participants they behave this way. Not because that would be what like perfectly optimizes their utility, but because that's the way that people think. And then by modeling that and having those agents interact with each other and seeing the way that it works out, maybe we're able to demonstrate a statistical property of markets that we've been unable to duplicate otherwise, right? That's the sort of stuff that you want to look for in terms of economics and how things are going to go. Is there anything you don't have a meme ready for? No, usually I don't have a meme ready. That's the funny thing. Okay, I think I've been slacking on my meme game. David says it also avoids the troubling notion that markets are/can be manipulated. Not always, but certainly vulnerable. Oh, absolutely. Absolutely. So you know what? This is also something that they're lying to people about. So they come out and they say, well, okay, yeah, like you can move the markets in the short term. But then if you do that, people will see that the thing is overvalued and the asset will come back in towards the optimal price. Wrong. All orders have impact and their impact is permanent, which is to say, if I come in and I buy a large amount of something, it's going to move up. And then if nobody does anything else, it's just going to stay there. In order to bring it back down, you're going to have somebody taking a relatively large trade on the other side. And who's going to do that when there was somebody who was just buying it and they don't know why they were buying it? So, right? Can you just look at Tesla? I'm not saying that it's like the word manipulated is a little bit too charged of a word. The word manipulated is too charged of a word. That's just trading. You come in and you buy an asset and you're doing so with the expectation that people that the orders in the future will interact in such a way as to increase the value of the asset so that you can make a profit, right? And that's all it is. So I don't want to say that that's manipulation, but yeah, you can come in and buy something and like buy it persistently over time in a way that garners public interest and, increases the value of your company. And then you're able to use that additional market cap to do more investments and other crazy things to perpetually keep your stock really high. And yeah, there seems to me that there are a lot of stocks that if the stock market was an accurate barometer of the true value of companies, that the stock market would probably be like 50% of what it is now. The reason that we get the result that we do with the stock market is because so much money is going into the system and it has to go somewhere, and that's it. So the stock market is mostly a reflection of the monetary supply right now. Even after all of this tightening that we've had. Because we're seeing more and more of that excess monetary supply instead of going into consumer goods and creating inflation, it just goes into the financial markets. And so you get like inflation in the financial markets, which we all love, and not as much inflation for regular people, right? That's what's going on. And yet, do I have to go further and call specific people out? That is 100% what's been going on in Tesla. That is 100% what goes on in Tesla. Tesla was never worth as much as the multiple that it's been giving. Really don't think that it is. But don't go short it, because the prices are not going to reflect the true value. They're going to reflect the orders that are going into it. What's going to change that dynamic? I don't see something changing that dynamic. I think the only thing that could change that dynamic for Tesla would be a government that was very, very unfavorable to Tesla. Right? Like if Joe Biden had won a second term, then maybe that would do it, right? But it didn't happen, so I wouldn't go short Tesla. I don't know if that's like the best opportunity for you to invest right now, but I wouldn't go short it. Say, can markets be quote unquote manipulated? Yes. Or to be more diplomatic about it, can large participants have large and permanent impacts on market prices? Yes. Yes, they can. And again, this idea that the market is perfectly efficient, it's a lie that we tell the public so that nobody questions it. So that nobody comes in and says, well, but maybe Tesla isn't worth as much as as the price says it is. Maybe laying off workers isn't the best thing for companies. Maybe, right? But these people that are in charge, especially like the CEOs of companies and everything, right? Their interests are in you not questioning what they're doing and just going along with what they're doing because the market says that that's the best thing. Like that the market agrees with them. See? Laying everybody off, that was a great thing. Our stock price is up. That means I'm right. And everybody hears that. No, okay, well, I can't argue with the market. We're creating a hellscape, frankly. The job market has become a hellscape, man. It's crazy. Yeah, the stock market is mostly a reflection of monetary supply. I don't know, like, to which degree it is, but it is absolutely true. Like the over in the time period that I have been watching markets, the most predictive thing of stock market gains is changes in the monetary supply. Absolutely. Maybe they're going to fire everyone and go full automation because the process is old. Who knows? Yeah, well, here's again, it's like, okay, AI is going to take over everybody's job. I don't think that we need to hire anybody anymore, and that the stock price likes that, and so I must be right, because AI is the future. I really don't think that AI can do all of the things that people say it can do. I keep hearing all of this stuff about, like one of the things that we see happen is we're in a jobs recession for white collar workers. When you look at white collar workers, the top maybe third of workers, that it's in a recession. Like just straight up, the number of jobs is less, unemployment is up. You don't see that across the overall economy because the lower end is doing a lot better than it used to. Okay. And many people will say, well, that's because automation is coming to take their jobs. Well, can you show me where that's happening? Can you show me this data that conclusively shows to us that these jobs are disappearing because they've been automated away? Because every use case of AI that I've ever looked at says that it is not accurate enough to trust it with those sorts of things. Like Devin generates some code, but it seems to me that Devin has not actually made me more productive. Like, it's just a different way to find an answer from finding an example on Stack Overflow. But it doesn't actually save me time. In fact, for any amount of time that it does save me, it probably makes things take longer because you have to deal with when it gives you wrong answers. But that's what the market's enamored with right now, so we all have to go along with it. Until it's not, and then the industry collapses and everybody's like, I always knew that, that we were in a bubble. Of course, it's so obvious, everybody. This is just an absolute clown show, man. Let me take it a step further. One of the big kind of cultural changes that we've seen over the last decade has been the advent of what those of us on the right call the woke left. Okay. The woke left is essentially talking about people that believe that things like trying to create equality or equity between different demographic groups is more important than meritocracy, right? So they're saying we shouldn't necessarily give the job to the person that's the most qualified. We should give the job to the person that is the most disadvantaged historically. Is essentially what we're talking about when we talk about the woke left. Well, that's BS if you're saying that's BS to what I said, or if they're talking about the services like SaaS do so much more for white collar things like accounting services have reduced dependency on in-house talent. Maybe automation is next, but compression in the market happened. I don't know about that. No BS to woke hiring. Yeah, okay. So here's the thing. Who is the most qualified for the job? Like the reality is that for any given job, there's probably thousands of people out there looking for work that could do that job to an acceptable level, if not to a great level. And there's not really a good way to like compare them against each other, you know? When we say that we should be meritocracy, that's aspirational. You got to understand that. Don't be autistic about it. When we're autistic about it, it's like, well, it's supposed to be this way and it's not this way, so there's something wrong with it, and then that means that there's an injustice, right? Okay, no. Meritocracy is aspirational. The only true meritocracy is God's judgment. We as humans just don't know enough about the situation to know who would perform the best in a particular role, because the future is unknowable and all of these sorts of things, okay? So there is an issue. There is an issue in society. Like, if you're on the right, you have to understand this, okay? A large portion of success comes from your past success and or the success of your parents or people in your community, and not from your own efforts. In other words, a large portion of the economy has become entrenched. It has become entrenched. So there is a problem, but the whole woke movement, I think, is like the worst solution you could possibly come up with for that problem. Because what are you saying? Well, because we don't actually live in a meritocracy, we should just give the power and the wealth to the people that haven't had it in the past, just to flip things around. And in my opinion, that kind of approach to things just kind of further entrenches those people that are very much at like the very top. Because what you're doing now is you're putting a bunch of people into positions that are really not going to have the capability of going up against the people that are at the very top. What do you actually have to do? You have to have people that are actually making a real change to things. People that have new ideas, that have proven new things, right? So here we have this group of researchers in the financial space that have proven very important properties of the markets, properties that like the whole financial industry, frankly, are using to some extent in their trading and in their portfolio management and so on and so forth. And they get ignored because they are not the top researchers, right? And instead of elevating those people, we're elevating people that didn't really do anything. So you never have any chance at changing it. You see? The woke ideology exacerbates the very problem that they're trying to solve. There is a real problem. That the society, like the progression in the society has stagnated. There are ideas that are like way outdated, well proven faults, and we continue to cling to them. And these are ideas that are like at the very heart of our government and economic systems. And anybody that's in the know, anybody that like really does this professionally, really looks at the data, knows that they're wrong, and we continue to cling to them. So that's what I'm trying to do. Because when I come in, yeah, we're we're going to try and learn the most about markets. But I'm well past this, like, oh, I'm become a millionaire from this sort of thing. No, probably not. Like, it's much more important to me that we tear down these stupid notions that markets are perfectly efficient. The issue I see, so I saw this, somebody had this idea the other day. They're like, you know, this person, I shouldn't say I try and talk about them in the third person. They got interested in markets because of GameStop, and they lost a ton of money from it. And they basically realized that everything that they knew about the market and everything that they had read online and everything was basically incorrect, and it led them in the wrong direction. And so they're like, oh, what we really should do is we should create like a new investing platform that has social media integrated into it to try and solve this problem. And I'm sitting here like, so you were misled by people on Reddit, and the solution is to put those same people right next to the buy button? Like, how does that help? How does that help? I probably need to respond back to them again because they're like, oh, well, we can do things to like, how do we say like what is authority and things like that, right? So I keep coming back to the only true authority is reality, right? True meritocracy is only found in God's judgment. Is the other take on that, right? You got to prove it to me with the data. The whole reason that this problem exists is because we rely on the heuristic of listening to people with authority. How many times do we have to see this mistake go down before we start to say that authority has become so entrenched in our society that it's not really a very good predictor of whether something is true or not, particularly not on a controversial or like new fields sort of a thing, right? Really, so essentially, it's a good heuristic, but our society has developed to the point now where that heuristic is like the biggest weak point. There's only one way around it: empirical evidence. The solution to authority is not yielding results, not giving me listening to authority is not giving me correct answers. The only real solution to that is empirical evidence. Authorities should have empirical evidence. That's the sort of, this is what I'm saying. This is the thing that started this whole discussion, right? Who are people that I consider authority, that I want to talk to, that I want to interview, that I want to show to you guys? Those people should have empirical evidence. These are the people that are the most knowledgeable on the empirical evidence, not the person that made the most money from it. I'm not the person that has the most followers on social media. If I'm going to make a platform, so this guy, I'm going to make a platform for that sort of a thing. Yeah, I should have discussion, but like the discussion should be able to directly refer to the empirical evidence. Is like I can have all of the stats about the company. I can do my own metrics. The platform that really allows people to do the real data science, which I really don't feel that publicly available platforms do that very well. And then you have a social component of it where you can show people the empirical evidence and make an argument with them and have a real discussion now about it. An empirical discussion. Right? That's what I want to do. That's what I want. I want to have a platform that allows you, that better enables you to take an empirical approach. And I don't really feel that the existing platforms do that very well. I can hack existing platforms into doing that stuff for me, but it wasn't built with that in mind. And if it was built with that in mind, it can be so much more powerful, especially giving you the ability to manage the data and all of those sorts of things. Sometimes creating changes is called that. Yeah, because all you got to do is you got to say, like, prove this is the way that the world is. And as a result, it suggests that we should do this instead of this. And if you're able to discover those new pieces of information and promote them and change, those are the people that should be rewarded. And right now they are not, in my opinion. Right? It's not enough to just displace existing authority. You have to displace them with something better. The people that are more capable, that have better data, have better empirical evidence, and therefore make better decisions. Otherwise, what you're doing is you're just replacing the system with the exact same system, and all of the existing corruption will exist. It'll just be from a different group of people, a group of people that frankly might be more inclined to abuse that power because they got a chip on their shoulder. I think the budget should reflect those sentiments too. Yeah. Okay, so when it comes to like the size of government and the budget, that turns into a difficult problem, because for almost everything that the government does, there's probably a piece of information that I can point to that suggests that the government doing that thing is beneficial. Okay, like there's a lot of studies that say that homeless that society incurs a cost from people being homeless on the streets, and that it's actually cheaper for the government to spend a certain amount of money creating services and dealing with that issue, for instance, right? Okay, but there's like a million different things like that, and what is your limit, right? You can't solve every problem with government. What should be the limit? And conservatives will say, well, these are the things that federal government is created for, and it should just be limited to those things. Well, but that's an ideological approach to it, right? What is like an empirical approach to what is the correct size of government, and based on that size, which services stay and which ones get cut? I don't know how to solve that problem. I don't think anybody does. You support benefit curve? I'm not sure what you mean by that. I don't know. Are you talking about things like that? If we stimulate the economy, that it actually, it benefits the economy overall, sort of a thing? So I think this is one of those things where, like, measuring the net positive outcomes of a decision or action in terms of cost benefit. Oh, sure. Like one of the issues that I see in a lot of like government decision making is like, okay, if I go and I spend money, and I give consumers money directly, like with the check, like we had during COVID, for instance, right? Does that stimulate the economy? Yes, it does. It does stimulate the economy, but how well does it stimulate the economy, right? And when you really get into the numbers, you find that those type of actions, you're really not getting your money's worth. Like, you're spending a lot of money and you don't get a whole lot of growth back out of it. There are some things, like the thing that you get the best benefit from is unemployment insurance. Right? Like, the multiples on them aren't very good, but we'll continue to do them. Like, that's kind of funny. But there's a lot of things like that where, we'll come to a decision. Like, oh man, I mean, since I'm like on a run today, I might as well dive into this controversial issue as well. It is my understanding that there's a lot of people in the military that feel that the United States investment in aircraft carriers is kind of a waste, that they shouldn't be spending as much money on aircraft carriers as they do. But if you do that, then Congress is like, oh, but my people here in this state, they build these things, and there's all of these industries that would really, really be harmed if we took that money and we put it into a different part of the military. And so there's no way that Congress would change it. And so like we continue to invest in something that's like in modern warfare there's like a real risk to it. Like, I don't think that China could just like take down all of our aircraft carriers right now, but in the next 50 years, I think that there's a good enough chance that the weaponry becomes sophisticated enough that investing that much in an aircraft carrier that can be taken down by a single missile is not very prudent. Right? And that is a trap that we get caught in because of the way that politics work. So I don't know how you change that one. You have to change the structure of the political system. And there again, you should be able to do empirical research, modeling things and people so that you can say, here's how we can change that system and make it better. Yeah, if aircraft carriers aren't effective, we need to explore other options and challenge the established norms, but any alternative must be proven beyond a doubt. Yeah. But that's exactly what I'm saying, is that the established norms are so powerful that in most cases, you can't challenge them. And I think that there's no better example of that than challenging the established norm that markets are perfectly efficient. Every piece of evidence that we have says that that's wrong, and yet we continue to teach in classical economics that they are. There should be any norm that we can tear down. It should be that one. I can't think of any better place. And yet I can just see from my own experience talking about it on this channel and everything, it's like, for some reason, it doesn't resonate with the average person. They don't want to hear it. I think that the idea that markets are perfectly efficient is kind of attractive to a certain segment of the population because if you're lazy, right, it kind of means, oh, I don't really have to do any work. I don't really have to think about things and how my decisions will affect the rest of society. You just let the market take care of it, right? Well, it looks like that there was a large meta order long in the treasuries. They came just short of the 110 even, and we have now gotten the post meta order regime change back to 27.5, where we have a new point of control for the session. Meanwhile, the S&P 500 did a V-shaped reversal. My algo didn't take any trades in there. But I'm kind of, so we'll see tomorrow. Like if I come in here tomorrow and I find that like it would have taken a trade or it has trades on here that it didn't take, then I know that there's something wrong, that like it's not triggering live. That like maybe, oh, actually, let's come in here and look here. No. So I'm going to say, do we even have any executions? No, we do not. No orders, no executions. It just didn't submit anything. I don't know. I don't think that's right. I think there's something wrong with it. It's been a while since I really tried to run something live, like, or on real data, so there might still be some lessons to learn there for me. Well, it is time for us to get going. I need to look. I felt like I had some things I need to. Well, one thing is I'll upload that video, but I have some things later today. But I think I might be spending some more time doing Rust. Brexit, how logical was it in terms of creating an efficient market? Well, Brexit, I think, is a very, very interesting particular case to look at because, I would say overall that Brexit has hurt the British economy. I think that there was always an understanding that it would to some extent. I think maybe it's hurt more than people expected. Is there a long-term benefit in it? Maybe, maybe not. I don't know. It hasn't been long enough. But, the whole thing is that there's a certain section of society that has been really hurt by these globalist policies, right? So how do you find a balancing that? I'm really not sure what you do. I don't think that it is sustainable to continue to allow the working class of first world nations to languish. I think this idea that we can export all manual labor to third world countries is dumb. I think it's a naive idea. Yes, it's technically feasible, like you can do it, but I don't think that it's very practical. Not everybody is built to sit at a desk all day. And it leaves you, too dependent on other countries. I think that there's a certain amount of independence that you have to have, and that you may just have to accept slightly slower economic growth as a consequence, right? Anyways, it's time for me to go. You heard the little bell. So I'm gonna get to it. I need to go and grab. I haven't been. I was not my best this morning because I
Block by.
forgot to go. Oh well, what's this? There's a big buy come through there. No news. No news that I heard, at least. Fed Day is historically the best day of the year to own stocks. Could be leaks from the Fed meeting, something like that. I don't know. I'm not going to be streaming the Federal Reserve because I have an interview at 1 o'clock. So I will see you guys tomorrow. Stay X.